Good morning, all, and welcome to the Node. I am Mike, aka Veteran Crypto, and this is your place for news, interviews, and education in all of crypto, DeFi, and TradFi. So, David will be joining us as usual here shortly. And until then, I kind of want to go over you know what? I'm just going to go over where to find us. We end up having very little time at the end, just because we get talking and get excited about a lot of these projects that we're doing deep dives into. And today we're going to be doing two different protocols. So today we're going to be focusing on Sky and Curve, but I do want to cover the news, here in the beginning of the show, and just want to organize my thoughts real quick. So if you want to join the conversation, let's start here, because I really like it when the chat is popping, and you all have input and are able to even call us out on if we get something wrong, or you feel that something that we put out, some information we put out, is inaccurate. So if you want to find us, come on over here to YouTube. You can find us at the Node Network, all one word. And I'll just end with the socials on that, because I really like it when you guys are all in the chat interacting and things like that. So go ahead and come on over and check that out if you're watching on X or on Arena or something like that. All right. That being said, let's jump right into the news. So I'm sure that you've heard on multiple other channels, if you're popping around the internet this morning, that SpaceX is launching their IPO today. And I was watching one of the shows earlier, and they were waiting for the charts to start popping, basically for it to go live, so that they could see what the actual locked in market price was going to be, because there's a lot of people that got exposure to it pre-IPO through tokenized stocks. So David, I mean, what are you tracking this morning with the big the big SpaceX freaking IPO launch?
Yeah, I've been watching Hyperliquid. I've been watching the markets on Hyperliquid, or the SpaceX market on Hyperliquid, and there's a lot of whale traders in there. Sure, yeah. Let me go ahead and share my screen here. Let's check this out. So the first thing, though, is let's take a look at just SpaceX over here. This is just TradingView data. So on TradingView, if I want to zoom in to this item just real quick, this is the daily. It launched today. So if we zoom in here to maybe like a 15-minute, yeah. So you can see I've got a little bit of data. I don't have real-time data on this TradingView account. So we got all the way up to 170, trading 155 right now. But the interesting thing has been over here on Hyperliquid. If we just take a look at trending, it's not in trending. So we're going to go to all SPCX, SpaceX, USDC. We're looking for the one with all of the volume. That's the market right there. Now look, that's spot SpaceX D. So that's super interesting to me. Is that SpaceX? Because it looks like it is. So this is spot, but spot SpaceX on, I guess this must be on Hyper EVM. I wonder what else you can do with that in DeFi. So SPCX, this is the XYZ market, and this is not the one that was trading, before the IPO. That market, I think, is pre-launch, but because it launched, that market's gone now. So we're taking a look SPCX here. It got up to 230, but there were a lot of big traders that were getting short up above 170, 200 or so. So there were a lot of big traders in the pre-market, in the trending, before the IPO launch. There were a lot of traders who were short up here, made a lot of money on the way down. So this thing sitting at 160 right now, there's going to be a lot of volume in here, a lot of volume. And it's not just SpaceX. Like, we've got to also think about, history may not always perfectly repeat, but it sure does rhyme. And so when you see these massive IPOs with, if we take a look at NDX, the NASDAQ, let's see if I can find that. NASDAQ, I just want to go here to all and XYZ, there we go, NASDAQ. But I want, let's see, how about TradFi? I'm just looking for the index, the indices. There's the S&P. I want the NASDAQ index over here on Hyperliquid, USA 500, biotech, small caps, XYZ. So I guess we're going to be looking at the S&P then. That's fine. We can look at the S&P. So the one thing about the S&P here is now that we've gotten the SpaceX IPO, the S&P is just within a stone's throw of its old all-time highs. But in the past, when we have seen expansionary phases, think the 90s and then the bust in 2000, it's the same type of narrative that we're seeing right now. It's the same type of circular financing logic. I'll give you $100 billion and then you buy $100 billion of chips from me, and then I'll count it as earnings on my balance sheet. It's like, okay, like it's kind of Fugazi, like market stuff going on right now.
It's a shell game.
Yeah, it's kind of Fugaziness. And so, I can't help but think that there are plenty of really good reasons for the market to correct, even just a little bit. We're talking about a midterm year. We're in a midterm year, and typically midterm years are not exactly the best. But just because that's what's happened in the past doesn't mean that the past has to repeat. So, and we've also got this tailwind of a Federal Reserve that seems to be stuck in between a rock and a hard place and is, probably unwilling to hike rates, unlike what the ECB did just yesterday. So if the Fed's like unwilling to hike rates, then maybe this market can continue to run here, Now, one other thing that I wanted to take a look at is crude. Because with everything going on in the Middle East, if we are going to take, those crude oil producing areas in that strait and all that infrastructure, which I wholeheartedly support, take it from those Iranian, Islamic clerics who would only use the revenue to kill people. Take it from them.
Well, that way, at least the American taxpayer can get all that money that Obama freaking shipped over there, and all the freaking military equipment that freaking Biden left in Afghanistan.
Oh yeah. Well, I mean, look, take the oil, and then what will happen to crude? It will collapse. The price will come back down to 70 or even lower than that. Crude oil. I used to trade crude oil, Mike, and it's one of these really exciting contracts to trade because it tends to overshoot. Like it'll overshoot to the upside, it'll overshoot to the downside when you get, if we take a look at OVX, that's the oil volatility index. Take a look at how volatility for crude has just collapsed. We got that expansionary phase. Volatility is mean reverting, though, and then we got the collapse right back down to the 200-day moving average here. So now that oil vol is down here, if it moves a little bit lower, probably means that the price will move lower. Now, what has been the biggest driver of inflation, year to date? What's been the biggest driver? Well, it's been crude. It's been energy, energy prices moving up. So if President Trump is able to, end that war in Iran and, crude oil collapses in price, that would be great. That would likely mean inflation rolls over and we don't get the double dip inflation that, so many people have been so worried about. So if inflation collapses because crude oil prices move sharply lower, well, then, the whole thesis behind the Fed needing to raise rates, that kind of goes by the wayside. So I'm just thinking to myself that, I don't want to be too bearish. Like, even though there are a lot of similarities between, what's going on now in 2026, with all the AI capex and all this hype, even though there's a lot of similarities between this and what happened during, the late 90s into 2000 with the bubble and the mania and the hype and, the asset prices soaring to the moon. There are, differences now. And I just don't want to be too much of a bear. However, when it comes to crypto, and if we just take a look at Bitcoin real quick, Bitcoin, look, I love Bitcoin. It's got a prophecy though. Like I'm going to keep calling it a prophecy because I think that's kind of what it is. It's like the Bitcoin cycle. Like no one can really nail down exactly why there is a cycle. I've heard so many different, explanations that, people have talked about ISM. People have talked about money supply. People have talked about, an inflation hedge. People have talked about, manufacturing activity. People have talked about a halving.
Yeah, that's the big one I've always heard is just it follows the halving.
I mean, I guess, so
but
if it
but
does,
I've heard the other ones too, the M2 money supply, and they try to show a correlation to that. And I honestly, I just think that people just, look, and whenever they see, a correlation, then, they're just like, yep, that's it. It's,
I mean, there was a correlation at one point, over the last 12 months with software. That correlation broke down. So, Bitcoin's its own thing. It's got a cycle. I'm going to call it the Bitcoin prophecy. And the Bitcoin prophecy says that we rally into July. In the midterm year, July tends to be positive. We put in an important low in June. Now, this 60K or 59.5K low, this may not be the low. And the prophecy says that it's unlikely to be the low. That we probably see the low by October, by Q4. So all I'm thinking about here, Mike, is, we probably get a rally and the rally fails. And then Bitcoin enters the doldrums, for the rest of the summer. It bottoms out. And then we get this amazing buying opportunity starting in October. So that's just what I'm thinking about when it comes to digital assets. And, if I take a look at Bitcoin, I love Bitcoin, but I'm definitely going to buy some Ethereum, especially if I can get it for, below the April lows of last year. I'm definitely going to buy some Solana just because, why the hell not? Especially if I can get it for $30. I really like Hype. A Hyperliquid generates a ton of revenue. So I'll be buying Hype. And you know what? Entries on Hype, if I can get it, if it pulls back to this trend line support or the 200-day moving average, between like maybe 50, between like $37 and $50 in this zone, that would be a great entry, I think. Really like Canton. I think that Canton is building great stuff. Looking forward to seeing what they do throughout the rest of this year. I like BitTensor Tau. It's an interesting chain. Definitely buy some of this if I can get it for $100. BNB chain. I despise Binance, but I like making money. So if BNB moves down to $400, I'm going to be buying some BNB. Although I'd like to get it for 300 or less if I can. Tron, another one of these Chinese chains. I'm definitely going to have an allocation to this thing, but I'm going to keep it small. Especially, if I can get it for 27 cents, I'll buy some. I like Ton, just because, I think that that built-in user base on Telegram, eventually they'll do something with it. I like the privacy coins, but here's the thing. Monero had a big pump and dump. So, as of right now, this is a topping tail and also a head and shoulders pattern here. Left shoulder, head, right shoulder, neckline, pattern completion at $100. So if we get, the pattern starts to break down below the neckline, I would look for $100 to buy Monero. But if Ethereum implements, and I was posting about this in the Discord earlier this morning, Mike, that if Ethereum implements that EIP, whatever it is, 81, 82, I think, it's privacy. It's a privacy layer on ETH, on Ethereum.
Yeah, so that's what One Armed Bandit was saying in the chat. Privacy is coming to Sol and ETH.
Yeah, exactly. So like you don't necessarily like need, Monero. Um,
C launched on Canton.
Sea ETH.
Yeah.
Awesome.
So an ETH on Canton.
I think that's great. I can't wait to use some of these SVM and EVM chain dApps natively on the Canton chain. That's
Yeah,
going to
with
be
the machine.
super cool. Yeah.
It's like I'm excited to hear from the horse's mouth. Gustav on Tuesday. Just kind of what that means. Bringing those Ethereum, EVM, smart contracts and stuff like that. And dApps to Canton.
I think it's going to be great. I think Canton is set up to, just dominate repo transaction volume on digital rails. That's what it seems like it's set up to do, and it looks like the moment that burn mint equilibrium reaches a healthier state, I think this thing puts in multiples. That's
It's been really hard for me to not take my dry powder and just ape into Canton. Because the more deep dives we do, it seems like the more of my bags and I've been keeping like $200-300 moon bags just in case. But I mean, for the most part, I've been exiting all my positions like Kita yesterday. After seeing
yeah.
the tokenomics and stuff like that, I exited Ondo. I had a decent sized bag of Ondo. I exited that after we did the deep dive because it's just as I start to see. I mean, I'm trying to invest, longer term. And the more that we do these deep dives, the more I realize that the token has nothing to do with the success of a lot of these companies and a lot of their products and their offerings. And I just don't see that being bullish long term. I know a lot of people would disagree, but my thesis is that long term, any token that I own, I want it to have a very direct connection to the success or the revenue or the fees that are generated by the project. Through programmatic buybacks like Hype, burn mint mechanisms like on Canton. Just those types of built-in hardwired uh, you know uh, tokenomics and mechanics that potentially not nothing's a guarantee, but is gonna I see it as a much higher potential for price go up than just relying on social media hype and retail FOMO.
Look, I agree with you 100%, Mike, and that's what we talk about here on the channel every single day is value accrual. One thing that I would love to have a conversation about is how to run a basis trade on Arrow, where you've got those locks, right? Generating, I think it's 25-30%. You could
Between
generate even more.
yeah, it's been between like 20% and 50%, but it's been hanging around 20% for quite some time.
So imagine if you could get, maybe you decide you want to stay long, but you could either hedge yourself, partially, or hedge yourself entirely and get delta neutral and increase your yield.
That would be beautiful. I wouldn't mind actually doing doing at least part of a show, or maybe even doing it on the market wrap. Because this morning we were talking about since you're just doing the charts for the 15-20 minutes, maybe adding on and having it be showing tutorials on doing different basically different strategies
Yeah.
live on the show. So like maybe one of them should be me, you showing me or teaching me how to use my staked arrow, because that's what's becoming next month. Using those staked arrow locks to get delta neutral or at least hedge.
I think it's a great idea. Now, I would love to, extend the length of that show from 15 minutes to a full hour. And
Yeah,
I think that we should do exactly that. Start
yeah,
doing walkthroughs where we've got something that we plan to talk about during that show, and then we go ahead and do it live. We'll do it
yeah.
live. Fuck
And
it, I'll do it live. We'll do it
well, because
live.
I know that there's a lot of arrow lock or arrow stakers out there. Not just in our community, because I mean, like One Arm Bandit is saying he's an arrow hodler. But I know there's a lot of people out there that have those arrow locks. And so, I mean, I think it would be of great benefit to show people it's like, okay, you're locked. good, bad, whatever, you're locked. This is how you can hedge those and or potentially get fully delta neutral in those positions.
So, Mike, you see what Not Scoop Boy said in the chat. So, just an FYI, a full range LP earns the same as locks for most of the time. Okay, so although that may be true when you're just taking a look at like the fee APR on the LP compared to whatever the APR is on the lock, the difference is that when you're holding that lock, you're holding spot. When you're in an LP, you've got a lot of gamma risk. And so that impermanent loss risk, you can't hedge that away. That is, I mean, maybe you can use something like Gamma Swap to hedge it away, but I don't trust Gamma Swap. Their math doesn't math to me. So
the way that I see those locks, and what's becoming a stake is I see those as long-term, like, forced long-term hodling, basically, but I'm earning 20% or more, instead of just, only relying on price appreciation. I'm earning yield, no matter what the price does. And if it ends up, price go up, I'm in a much better position with a much larger bag. And over time, with the new platform, everything that I've read so far, still a lot to be determined, but I'm going to be able to harvest that yield, anytime I want, because it's not going to have epochs anymore. It's going to be real time trickle into your account, and potentially I'll be able to harvest that if I see an exciting opportunity, or if I just want to harvest it weekly as part of my to-do list and swap it into stables as my dry powder storage for when interesting projects come up, or if I just want to DCA into Bitcoin because there's a dip or whatever. I want to use it to take a trip. That's kind of why I got it, and it's starting to play out. But again, it's not a guarantee.
Yeah, man. I mean, I would just, I would love the opportunity to run through and show you and everyone live how you can run a basis trade using those arrow locks as your collateral, I guess you would say.
Let's do that next week. I'll make a note of it.
Yeah, we should definitely do that because there's a lot of options. I mean, look, you could, can you trade it on Hyperliquid? Probably. You can probably trade Arrow on Hyperliquid. Yeah, you can. And funding is super positive. So it's like, basically, since funding is positive, if you get short Arrow on Hyperliquid, you're going to earn that funding. It's 11%. So that 11% would just be, tacked on to whatever you're earning on the lock. Yeah. And so if you get delta neutral, let's say you've got $1 long in the lock and then $1 short the perp on Hyperliquid, now you're delta neutral, but you've increased your yield by 11 points. So I like that type of play.
So Scotty, that's what we're talking about is, separate from this show, David was doing the coaching, on the, the market wrap, later in the afternoon. We're thinking about just, whenever he's not doing the coaching, if he starts doing that with another member of the community, if he's not doing that, basically we would just, that, hour, other than the charts at the beginning, would be, me and him, or, him by himself, or, maybe you, Scotty, coming on, and, and maybe even Prince, because it sounds like he's a professional options trader. We might be able to bring some people on and bat around ideas.
That sounds great. I would love that. Look, if there's someone in the community who is a professional options trader, I would love the opportunity to have that person on, once or twice a week, and we could chat, because that's what I know best. Like, when it comes to options, I know that stuff inside and out.
Well, and like, full transparency, I think that, like we were talking this morning, is, the titles that we could come up with and the thumbnails that I could come up with would perform much better. If we had a thumbnail that was like, get delta neutral on your arrow locks, people that understand what that means would be like, oh shit,
exactly.
You know what I mean? So I think that was a very good call this morning, David. That I think that the market wrap is the perfect show for that, because
I think it would be great.
There's a whole 45 minutes or more if we want to go over, because there's no show after that to worry about. So if
we should totally do it.
Yeah, if you get in a groove, fuck, go 2 hours, whatever.
I think we should totally do it. It sounds great. Yeah, I'm
Yeah,
game. Let's do it.
Jeff is in. He loves the idea.
Yeah, let's do it, man. 100%. Let's do it.
Yeah,
Why don't we start next week?
yeah, no, absolutely. I there is one day I'll talk to you about it after the show, but there is one day I got to go to the airport to pick up my nephew. He decided to book his plane ticket without freaking talking to me, so it's going to conflict with one of the days. So I'm going to see if he can change his ticket though. All right. So back to the news. So what I got pulled up here is some Canton, and I want to get your input on this, David, because I'll be honest. I read this, and it was Greek to me. So it says an open source contracts library reference implementations and developer tooling for Canton, backed by the security standard behind the 35 trillion in valuation transferred on chain. Open Zeppelin is building the secure development foundation for institutional applications on Canton. So I click through. We're building a secure contracts library, reference implementations, and developer tooling for Canton's privacy-first ecosystem, engineered for the most crucial institutional use cases. So what are they talking about here?
Oh, yeah, this is great. Mike, if you scroll up to the top, now let me just read through it one more time. So basically what they're saying is there's a library of these smart contracts that Open Zeppelin has been building on the Canton network. They've also been building reference implementations and developer tooling. So these are all things that a software engineer would use to build dApps on Canton. So, it's not just Zenith that is, building a layer that allows developers to create dApps on Canton. It's also it's also Open Zeppelin. They're building, and this is open source stuff. So all that means is anyone can use it to build dApps. So what that means for me is I could build a dApp on Canton. So this is the type of stuff that I'm super, super interested in, super excited for. The thing that's missing still, though, is like the wallet layer.
Native. I know that's a thing for you, wanting to show that you're holding native Canton.
Exactly. Like I can't hold a synthetic. It just doesn't work for me. Like all those tokens that I ran through that are on my shopping list for the beginning of the fall. I'm going to hold all those things spot on the layer one. I'm not holding any, derivatives. I'm holding the real McCoy. And so it's been challenging for me to find a way to confidently hold CC spot. I know that there are a couple of wallets that allow you to do that, but I have no idea how they would interact with, these open source libraries and references that Open Zeppelin is building. I don't know if those wallets that I'm thinking of will allow me to, connect to Canton and, operate a dApp through Zenith. I don't know how that would work. Still a lot of questions. I've still got a lot of questions about exactly how things like the implementation of things would work. But the very fact that Canton seems to be building so quickly, the fact that they generate $1 billion a day in fees, the fact that these big institutions are basically migrating their repo books onto Canton, it seems. Look, this is super, super bullish. And it seems like it's in the very early stages still. So I'm just thinking to myself, hey, I want to, get in at the ground floor, right? And 330 billion in tokenized treasuries, although that is a lot, it's not. That's the thing, though. It's just getting started.
That's such a drop in the bucket as far as the potential.
Right.
So
it says just getting started.
Financial institutions process around 9 trillion in tokenized value on Canton every month. That's currently. That's what's being done currently. That's not there might be, or we're talking with, or hypotheticals. That's like what is happening currently and why it generates. And this is part of our kind of fundamentals of the tokenomics of these projects that we are bullish on, is these projects or companies that actually generate revenue, that actually generate fees, not what they could do in the future, or if they get this contract, or if this organization decides to build on. This is what has been built, is live, and is being done. This is
So check this
present
out,
future tense.
Mike. Check this out, man. You know how much? Can you guess how much volume is transacted every day in like the TradFi repo market? Can you 9 trillion a day? So that just tells me that if this market is going to be upgraded onto digital rails, then the opportunity here is massive. So imagine, Canton going from doing $2 million a day to doing, 30 times that, $60 million a day. All of a sudden, that Burnman equilibrium, token number go up off of that shit. So
potentially,
yeah.
Big
just speculating. But
it's important to add that distinction is it just because it's deflationary doesn't necessarily mean the price will go up. Do I feel that it will? Because if there is more tokens being burnt than in circulation, and if the token is required to use the network, and for validators, to actually have a validator or super validator, they have to stake a large amount of Canton. That is buying pressure. They have to buy it to use the network. They have to buy it to if Bank of America, if they're going to use the network, they want to have a validator, because with the validator, it mitigates the cost of using the network because they earn for running a validator. And so the way that and this is what we talk about and why we focus so hard on these fundamentals of the in-depth tokenomics past just the circulating supply and the max supply. And that's important, but you need to go deeper than just that surface level. You need to understand the inner mechanics, the fine details of the role that the token actually plays in the ecosystem. Because if it's simply a governance token like Ondo, it's not needed. Kita, we found out yesterday, really not needed. People can pay fees in USDC. They don't even need to use. So that was an eye-opener for me.
Dude, these deep dive pieces of research that we run through, like it's because there's no way to know everything about all these different chains and coins and tokens and projects. The only way that we can learn, it's always changing. The only way we can learn is by doing the deep dive research and then running through it. This is, we run an educational platform as much as anything else. And so, the one thing for me, Mike, as you were, speaking about, Ondo and Kita and like value accrual, that's the thing. Most projects don't have tokenomics that, where there is actual value accrual. The ones that do, they're very few in number. And so when people talk about utility, like, oh, my token's got to have utility. Well, okay, that's great. If it's got some utility, that's better than it just being a pure meme, but it's not enough. Like, so, there needs to be more than just utility. Like the protocol has to make money, and it's got to return that revenue to the token holders in some way. Well, and if it doesn't do that, then
token that costs 0.00001 of that token per transaction, that's utility. But what does that mean? What is the throughput of the of the chain? What is how long is it going to take for that if the fees are burned, if they don't have to be, it can go back out into circulation. If those fees are burned, how long at max, full throttle, how long is it going to take to put a dent in that token supply when it's that cheap of a token, or that cheap of fees?
I mean, that's why we run the research, exactly. To answer questions like this. That's why we do this. So Canton, awesome. What else is going on in the news today, Mike?
All right. So we got, actually, let's move over to this, add you back up. All right. So let's Mantle. So Mantle AI native prediction market. Mantle has introduced Insight X, an InfoFi layer designed for the upcoming 2026 World Cup. It allows users to trade on macro trends and sports outcomes while their collateral remains productive and earns yield in the background. Do we want to know more about that?
Sure. I mean, we could take a look at Mantle. Didn't they? Mantle was one of those chains that had a lot of hype around it at one point. The Mantle.
I think they had some issues, didn't they?
I never followed it closely enough. I remember, last fall, the token, it was like almost at $3. It really had a run. But it's honestly, it's a beautiful pattern that Mantle put in. I mean, not if you're holding the thing, but like if you're just looking at the chart.
If you were hodling it, you're pissed as fuck.
Yeah, no, but if you're just looking at the chart like me and you don't have a position in that thing, beautiful chart. I mean, it looks just like the late 90s, 2000, and then the bust. It's a perfect boom and bust chart. So, very interesting chart, but what's going on with this? So, we got prediction markets. Okay.
So it looks like Dubai UAE Mantle, the premier distribution layer connecting traditional finance and on-chain liquidity, today announced the launch of Insight X. We kind of went over that. Let's see if we can skip ahead a little bit. Beyond prediction markets, a new InfoFi layer on Mantle. One of the biggest limitations of traditional prediction markets is idle capital. Insight X enables users to earn yield while markets remain open, drawing from multiple sources, including liquidity provision, protocol fees, stablecoin strategies, collateral assets, and AI-powered market making. By keeping capital productive throughout the market cycle, Insight X turns prediction markets into an InfoFi network where information and capital move together. The three-layer architecture. Insight X is built on a hybrid architecture across three core layers. The AI intelligence layer transforms real-world information into live market signals. Execution layer enables AI-powered pricing, liquidity provision, and trade execution. Settlement and verification layer on Mantle secures assets and transactions on chain, delivers low-cost execution, transparent outcomes, and scalable market infrastructure. And then finally supports high-frequency trading and productive capital between settlement events. So, David, I know that with your deep understanding of this stuff, I mean, does that make any sense to you? Do you see any value there?
Oh, for sure. But how do they compete with Polymarket and Kalshi? And I'm trying to find that protocol.
Do they have an AI, like an AI?
Do they have an AI intelligence layer? I don't know. But I'm trying to figure out how I can actually use this because I don't see this protocol on DeFi Llama. Insight X. Is this live, Mike? This Insight X? Is there a link to this somewhere?
I don't think so, because it says Insight X chose Mantle for its low-cost scalable infrastructure. It says why Insight X is building on Mantle. So they're present tense. So I would guess that they're still building.
Okay. Yeah, I mean, prediction market stuff is great.
Go to mantle.xyz and check that out. Or actually, here, I'll just do it. Never mind. All right.
Yeah.
So let's see. Building the liquidity chain of the future. Let's go to ecosystem.
It looks like it is not live, not something that we can actually use. That's what it looks like, because when I was just taking a look on DeFi Llama just now and then browsing around on Google, I was able to find Intent X. But so here, pause for a second. You see that where it says Meth Lab? This is the reason why I never used Mantle.
Meth.
Dude, like, yeah, because Yeah. So, but what Scotty's saying in the chat, if I'm being honest, all these chains are the same. He's right, man. Like, Mantle, like if you look at the DeFi TVL for the Mantle chain on DeFi Llama, there was a ton of mercenary capital that came in, at the beginning of this past February, and it all exited, in April. So, and then the Mantle token itself, like, rallied last fall and crashed. And so when I look at these protocols, and then when I remember back in the day, back in my day, in 2023, yeah, back at the start of the last bull in 2023 and 2024, the only thing that was going on here was the meth lab, which is like fucking crazy, okay? Because like the dude who cooked up this, whatever that protocol is on Mantle, like he called himself the cook, which is, normal for DeFi operators to call themselves a cook. But he took it like one step further. And like the meme coin was Puff, like Puff the Magic Dragon, like the LST token, the ETH LST is METH for meth. It's like, bro, I don't want anything to do with that shit. Like, when creators start naming their stuff after like hardcore drugs, dude, I want nothing to do with that. So
I'm looking for serious projects. If I'm putting money into something, I don't want a bunch of jackholes that are not taking the project seriously and handling my liquidity seriously.
Yeah, man, can't take it seriously if it's got something called a meth lab on it. So no, thank you. And the performance of the Mantle token has been up and down, so hasn't held on to any gains. Yeah, I'm gonna pass. On Mantle.
Well, and something that's important to understand as well is it's what Scotty was saying is, I mean, I wholeheartedly agree that when it comes to architecture and things like that and how a lot of these chains work, a lot of them are very, very similar. And really, what sets them apart is adoption.
Right.
If they're generating fees and revenue, and the tokenomics, and that's like the trifecta that we focus on here. Is there adoption, real adoption? Are people actually using it? When they're using it, does it generate fees or revenue? And last and probably most important is, how does that translate, or how is that connected to us, the token holders? Because otherwise, why the fuck are you going to buy it?
Yeah, man. And how many layer twos? Like how many of these layer ones and layer twos are there now? But specifically, if we focus on the EVM layer twos, like how many Ethereum layer twos do we actually need? Like, if we're being honest, really,
honestly, the only one that stands out to me, and I'm kind of biased, but the only one that stands out to me because of adoption, because of kind of where serious investors are putting their bets, is Base.
Hyper EVM too, Arbitrum too.
Yeah.
So it's basically, and then you got the BNB chain there's also a layer 2 BNB chain. But if we just take a look over on DeFi Llama at the top chains, well, you got mainnet, ETH mainnet, you got BNB chain, and number 2, you got Base is one of the largest layer 2s. You got Hyper EVM. Yeah, I think Hyper EVM.
Out of the big ones,
I think Hyper EVM is. I'm almost positive Hyper EVM. In fact, Hyper EVM is younger than Base. And then Arbitrum, and then you've still got Polygon. I mean, Polygon's there. You got the Plasma chain, stablecoin chain. That one's still there.
The only issue I want to point out real quick about Hyperliquid is, and I could be wrong on this, but with my knowledge, is that it has a single point of failure. If for whatever reason, Hyperliquid loses that volume that you've talked about, if it loses that, that traction that it's had, that it could go sideways fast. So, with Base and, some of the other ones out there, the other layer 2s, and I'm not biased because I mean Base doesn't have a token. It's not like I'm invested in it or anything. It's just I see that it has Morpho, it has Aerodrome, it's connection to Coinbase. There's a bunch of things that it has going for it to where there's no single point of failure, if that makes sense.
Yeah, yeah, no, it does. I think so. If we just take a look real quick, Mike, at the rankings, right? If we take a look at these rankings over on DeFi Llama, you've got mainnet number one, BNB chain number two. I'm going to pass on all of the other layer ones just for now as we talk through these. Like I've used just about every single one of these chains natively. So, we take a look at something like the Base chain, excellent chain, really a great user experience on Base. You take a look at the Hyperliquid layer one. That's the layer one, but I like the Hyper EVM chain because it enables you to build and connect your dApps to the Hyperliquid layer one. You got Arbitrum, another layer two, EVM layer two, Polygon, an EVM layer two, Plasma, an EVM layer two, Monad is an EVM layer two. I think it's a layer one, but also an EVM layer two. You've got OP mainnet, EVM layer two. You've got Starknet. This one is an EVM compatible, I believe, layer two. Mantle, we were just talking about. Inc is another layer two. So, Mega ETH just launched a little while ago, another layer two. How many layer twos do we really need? That's the question. How many layer twos, do you really need?
How many do we need, or how many are they going to give us?
Right. I mean, I heard what's his face, Vitalik, talking about, they've made some serious changes to the roadmap for Ethereum. Basically, like it looks like they brought in a new dude to lead the Ethereum Foundation, and he cleaned house. It looks like because there were all those exits of like developers and like people who had something to do with Ethereum. Like the new leader, he basically said, you're either on board or you're out. And I love that. So, I'm just thinking to myself that the roadmap for Ethereum moving forward is probably not layer two centric. It looks like they're going to try to upgrade that layer one as much as they possibly can. I'm all for it, man. I'm all for it. Sounds good to me. Because as of right now, ETH mainnet is, if you're serious about DeFi, ETH mainnet is really where you want to be, because that's where all the dApps are. That's where all the liquidity is.
Yeah.
That's where all the opportunities are. Yes, there are opportunities on Base and Arbitrum and Hyper EVM and, sometimes Plasma and sometimes other chains, but majority are on the mainnet.
I think that it's going to get to a point to where it almost won't matter. I mean, it seems like there's a handful of chains, layer ones and layer twos, that are being the preferred places to develop. You got Ethereum, you got Base. It looks like Hyper is one of those. Trying to think of a couple of other ones out there that really stand out. Canton. And it seems like that there's huge pushes to break down the barriers between them, as far as bridging and just that free flowing liquidity, to where it's not siloed. It's just kind of free flows amongst those chains. It's what it feels like. From everything that I'm learning and reading, from doing this show and talking with you.
It's definitely happening, but it's not real yet. Like it's not quite there. But I think that
I see what the moves that they're making.
Me too. Me too. Yeah. I would love to be able to, supply liquidity or have a collateral position, let's say on mainnet, and then borrow against that on Base.
Yeah.
And take whatever I borrow and deploy it on Hyper EVM. And then I want to be able to go cross chain without the friction.
Well, and honestly, that's what it sounds like Aerodrome is building out, to where, it's just that one click where it does, as long as the chain is supported, ETH mainnet, Base, there's a bunch of other ones like 9 or 10 last I looked, where basically you connect your wallet and it doesn't matter where your liquidity is on those chains. You can select it, select what DeFi position that you want to get into, use whatever you want, whatever token on those chains that you want as the liquidity, and it's like a 1 or 2 click process where it will give you the breakdown of, hey, I'm going to bridge it, I'm going to this is the fees, this is what it's going to do, this is what you'll receive. It breaks it all down, and you still have to approve it and stuff, but it's that simple. It's just, I mean, the barriers to entry and the learning curve is going to be just greatly reduced with platforms, protocols like that. And I think it's going to become like a market, like a market standard to have UIs and UXs like that.
I think so too. And not just between the layer 2s, but also between layer 1s and layer 2s. So what that means is, if you've got, let's say you've got a position on one of these, like on Lightning, right? The Bitcoin layer 2, because there are actually, like, they're very small and they're not really developed fully yet. Let's say you've got a position on Lightning, right? And you want to, maybe use that as collateral to borrow against it on mainnet. Okay, what if you can actually do that natively and just go between layer 2 to layer 1? And then once you collateralize your position on Lightning, you borrow against it on mainnet. Okay, great. Now maybe you want to deploy what you borrow onto Solana. And then you take what you deploy on Solana, borrow against it on Tron. Just to be able to go from chain to chain like that without the friction, that would be a big deal. That's kind of sort of what Near did, but not really.
That's what I was going to ask you. Isn't that what you were kind of playing around with Near? But I kind of wonder just the way that Base is being built out, in the ecosystem on there with Morpho, especially with Morpho and Aerodrome. Just in the way that Morpho is already being integrated into Coinbase, their offerings and functionality and operating in the background. And I wonder if Aerodrome is going to have that, and then cross between Morpho, which is cross chain, and Aerodrome, which is becoming multi chain. I wonder if at some point that that's going to be a reality. That you're going to be able to, on either Coinbase, Aerodrome, or Morpho, that they're going to have a UX UI, user interface, user experience, to where you can do advanced strategies, with a couple of clicks, do delta neutral, make adjustments on some kind of UI, where you can make adjustments to how much leverage you want to take, or what you're trying to accomplish, and it will, and maybe even there'll be an AI that tells you, hey, that yes, that will work, or hey, this is your risk, this is the amount of risk you're taking on, this is your liquidation, whatever, and you just okay, yep, no, that looks good, cool, click, and it just does it all on all the different protocols for you.
I think that could be a viable future for sure. It would be great, because it removes all the barriers, removes all that friction. But Mike, what else is going on in the news today?
So we got about 6 minutes left. Let's see. So we got in the macro, we got AI infrastructure growth. CoreWeave is set to join the NASDAQ 100 index on June 22nd, signaling the massive institutional scale of AI native cloud infrastructure and its formal entry into the broader equity market. We can talk about that. I mean, we talked about oil and stuff already, so I don't really want to talk about that. Let's see what else we got. Japan's lower house passes sweeping bill to regulate crypto like stocks, opening
let's talk about that, because we've got a Japanese a Bank of Japan rate decision on the 16th. And so whenever the Bank of Japan hikes rates, crypto doesn't like that. So
Right.
yeah,
So
this could be interesting.
Japan's lower house passed a bill amending the Financial Instruments and Exchange Act to regulate crypto like stocks, opening a path to ETFs and a flat 20% tax down from 55%, while excluding stablecoins, with upper house passage widely expected.
So here, Mike, can you pause for a second there? Just if you scroll back up to the top about the headline. So up at the top there, the tax rates. Like, why do people accept this bullshit? Like,
right?
Like, what the fuck, dude? Like, why in the world should the government be stealing half of your gains? Why 20? Why any? It should be zero.
Yeah.
You know, this like one thing about the Muslims in the Middle East that I like is the zero tax rates. I was listening to some guy, wearing a turban or whatever, and he was, someone was explaining to him taxes in the United States, and it didn't compute because it shouldn't compute. It doesn't make any sense. It makes no sense. It's straight up theft. And the dude's like, well, so what do you get for that? And it's like, you get nothing. You get fucking nothing. So yeah, man, whenever I see that and people are like, oh, it's going from 55% to 20%, it's like, dude, are you capable of thinking for yourself? It should be zero. Just because this is what's been done for the last 90 years since the implementation of the temporary income tax does not mean that it's okay, or that we should accept this, or that, it's just like, bro. So Jeff, the one thing that they're getting right is no taxes, man, because that's the way it should be. The state should not be stealing from you. Okay? That's just the bottom line for me.
No, I'd say, don't get me started on that. I can talk about that forever. Property tax, and it's insane to me that here in the U.S., we 5 to 6 months out of the year to basically pay Big Daddy government so they don't come and freaking take away everything you own, throw you in jail. All right,
that's called extortion, bro. That's the definition of extortion.
Well, wait, we're kind of out of time on the news. Let's go ahead and jump into the deep dives.
Oh man, I wanted to learn more about Japan.
We got on a rabbit trail and burned up the time. So let's go ahead and jump into the deep dive.
Okay, let's check this out. So, Sky or Curve? These are both old school protocols. Sky used to be MakerDAO.
They just rebranded after some shenanigans.
Yeah, let's check out Sky. So one thing that I think about when I look at both of these protocols, Sky and Curve, is they've both got stablecoin products. So Sky has it used to be DAI. They still operate that product, but now they've also got USDS. So that's their new stablecoin product. So we've got Sky Protocol with DAI and USDS, and then we've got Curve with its CRV USD. So just keep in mind that there are stablecoin products that these protocols offer.
In decentralized finance, generating millions in profit means nothing if that capital is locked completely out of reach. By early 2026, the Sky Protocol, formerly known as MakerDAO, had amassed a staggering scale. The multi-layered credit and savings architecture held over $13 billion in total value locked. First quarter 2026 financial metrics showed gross revenue reaching a record $123.79 million, driving a net surplus of $46.04 million. Yet, following these strong earnings, Sky's governance token dropped 2.4%, stalling in a depressed range of 5 to 8 cents. Market participants frequently model DeFi governance tokens as automated dividend-yielding assets. They expect that when a protocol earns money, A hard-coded smart contract will immediately distribute a share of those profits to token holders. Why did the Sky token completely decouple from the protocol's explosive financial success? The answer requires tracking the exact mechanics of how United States Treasury yields are integrated into on-chain architecture. To understand the token's collapse, we have to track how protocol governance deliberately intercepted revenues to appease traditional credit rating agencies. Real-world assets, or RWAs, operate as the dominant financial engine for the Sky protocol. In early 2026, they generated between 60 and 70% of the protocol's total revenue. This revenue stream is backed by several $billion in short-duration tokenized U.S. Treasury bills. Operating within the broader macroeconomic interest rate environment, these T-bills generate a highly predictable yield near the prevailing front-end rate of 4.5%. This diagram illustrates the initial capital flow. Institutional and retail deposits of the USDS stablecoin enter the protocol, are converted by allocators like Monetalis and BlockTower into tokenized T-bills, and output a continuous 4.5% yield back to the system. That generated yield is then divided. A large portion is routed back to the end users through the Sky savings rate, set at 3.6% in late May 2026, and paid into an accumulating SUSDS vault. SUSDS is a non-rebasing receipt token. A deterministic accumulator variable ensures that while a depositor's token balance remains numerically constant, its redemption value in USDS increases continuously over time. Ultimately, Sky captures the net interest margin. This is the 0.9% spread between the 4.5% T-bill yield and the 3.6% paid out to depositors. That remaining spread routes directly into a central protocol treasury known as the surplus buffer. Here it combines with legacy stability fees and barrow spreads from the Spark subprotocol. This exact yield spread created the record $46 million first quarter surplus, currently sitting in the central vault. That massive stockpile set the stage for a critical battle over who actually owns the capital. This table compares the theoretical direct revenue sharing model against Sky's actual financial structure. While many protocols use immutable code to automatically route fees directly to token stakers,
Okay, I want to just back it up real quick and take a look at that. So okay, direct revenue sharing and discretionary buybacks. So percentage of profit, subscription fee, transaction fee versus market purchase, profit reinvestment, and token burn. Okay.
structure. While many protocols use immutable code to automatically route fees directly to token stakers, Sky operates under a system of discretionary buybacks. The Sky token has absolutely no automated, code-enforced right to the funds gathering in the surplus buffer. Any transfer of funds from the central treasury to open market Sky buybacks must be proposed, debated, and approved through manual executive votes. Institutional entities like the Stablecoin Development Corporation successfully generate millions in staking revenue, but this relies entirely on the current governance policy remaining favorable. This discretionary model creates key person risk. Consistently low voter turnout gives a highly concentrated group of delegates de facto control over the protocol's cash flows. This concentration leaves governance subject to political capture, demonstrated in February 2025, when a hostile entity attempted to take control of the DAO and alter its strategic roadmap. For investors, Sky is not an automated crypto asset. It functions as discretionary equity managed by a centralized board, meaning the token's value is entirely dependent on the
Hold on, pause it. We got to discuss this. So this is what we're always talking about, is understanding the tokenomics mechanics at a deep level. And that's what these deep dives are great on, is digging into this stuff. Because what I'm divining from this is that when we talk about hype with programmatic buybacks and burns, it's built in, it's automatic. Nobody has to vote. There's no manual processes. From the sounds of this, and correct me if I'm wrong, David, but what I'm understanding is basically there's a couple of people, or some of the major members that have to vote manually. You have to propose first, and then manually vote and pass for this revenue that's generated on the protocol to potentially be used to buy back or burn or do anything like that that's beneficial for token holders.
And what's the likelihood that they're ever going to approve a proposal like that if it means money comes out of their pockets?
The same as Ondo,
I was
voting.
about to say that, dude. It reminds me exactly like Ondo.
Exactly.
It's similar.
I'm
It's similar.
on Ondo Finance, and I control the freaking DAO basically.
Right.
And currently, I make all the money because I like money.
Right.
And then supposedly, I'm going to propose and vote to give away my money that I like to token holders. It's like
not going to happen. Not going to happen. Same thing's going on with Sky. I didn't know anything about the Sky governance token, and now I do. And now I know. Don't buy it.
I tweaked the prompt a little bit to focus more heavily on the value capture for tokens.
It's a good idea. We should do that for all of them now. Just moving forward. Yeah. Yeah, because I don't see what's the reason for owning this thing again? Like, if there's literally a handful of people that direct where the protocol revenues go, and it's not to token holders, then why would you ever consider buying Sky?
I mean, it looks like that the token is being used for a little bit of interest rate arbitrage. I mean, is that juicy enough though to hold it?
Well, so the interest rate arbitrage is what happens. That's the protocol. That's what the protocol does. But those revenues.
So that's how they made the 54 million in the first quarter, but
right. Right. Well, so the protocol, engages in that arb. But those revenues do not flow to token holders, the Sky token holders. So, I mean, and there's a lot of regulatory capture here too. MakerDAO used to be a DeFi native protocol. And then all of a sudden they rebrand to Sky, they launch USDS, and they start buying toxic sludge, return-free risk, the US treasuries. And now all of a sudden they're basically like a TradFi institution. It's basically like in the front, they've got the DeFi layer, but really this looks like a TradFi bank to me. That's what this looks like. It looks like a TradFi bank, wrapped up in a DeFi cloak to fool you into thinking that this is DeFi, when really this is totally captured by regulations. So, yeah.
The direct catalyst for the token's collapse was the intervention of traditional rating agencies, specifically an August 2025 assessment from S&P Global. S&P assigned the Sky protocol a credit rating of B-, labeling its stablecoin peg stability as constrained.
Okay, so here's the thing though. S&P and Moody's, these are the same rating agencies that were labeling dog shit batches of mortgages AAA back in 2007 and 2008. And, even today, there's no way to trust these rating agencies. They're likely captured as well. So when people make these, calls to authority saying, oh, well, S&P and Moody's, these are, the authoritative rating agencies who've been doing this forever, and we should trust what they say because they're experts. Bullshit. Verify. Don't trust. And I do not trust S&P.
The primary vulnerability cited by S&P was weak capitalization. The protocol operated with a highly dangerous risk-adjusted capital ratio of just 0.4%. This low score was driven by the underlying collateral. While Treasury bills carry a safe 3% risk weighting, Sky also holds complex synthetic assets like Athena's USD, which S&P assigns an extreme 1,250% risk weighting due to the vulnerabilities of its delta-neutral hedging strategies. To avoid a permanent junk rating and protect the stablecoin peg against macroeconomic shocks, governance executed a historic capital restructuring in March 2026. To build capital, they intentionally slashed the daily Sky buyback budget by 87%. They dropped it from $300,000 to just $37,600 per day. That is where the record first quarter surplus went.
Oh, got it. Okay, so they were buying back the token, and they stopped doing that.
Yeah.
92.5% of the protocol's profits were forcibly redirected away from token holders to build a massive capital backstop. This sudden starvation of open market buying pressure immediately suppressed the token's performance. The protocol was generating record revenues, but none of it was reaching the investors. Sky governance deliberately
Now, really
sacrificed
quick,
short-term.
because that is exactly what we're talking about when we talk about value cap. That is exactly what we're talking about. They basically, the value capture that the token had, they took it away. And this is what we have seen with Ondo. This is what we saw with XRP when they made RLUSD. We keep seeing this. That now that they've bootstrapped, they've used our liquidity to bootstrap these companies. Now they're cutting that off quietly behind the scenes. They are quietly cutting off that value capture to where you're basically being left holding a meme coin. So sorry, I had that.
And no, you're right, but also it looks like the whole reason why this happened is this protocol MakerDAO started buying treasuries, and so all of a sudden now Big Daddy federal U.S. government is gonna come in and say, hey, you gotta play by our rules now, motherfucker. This Sky protocol is just stuck, bent over a barrel, captured by regulation. And, the people who are running this protocol obviously don't have the best interests of token holders in mind. So, yeah, man, regulatory capture, that's what this looks like to me.
Token holder value to guarantee the institutional survival and creditworthiness of the broader protocol. If this new solvency reserve fails to absorb a catastrophic market shock, token holders face a grim reality. The protocol utilizes an automated debt auction mechanism. If Sky sustains massive credit losses, new Sky tokens are immediately minted and sold on the open market to recapitalize the system.
Yeah, so this is
Jesus, dude.
Yeah, this is not the best. This is I would describe this as suboptimal.
B minus, you might say.
This is like fucking D minus, man.
Dude.
Ugh, yeah.
Those that don't understand what we're talking about, and not that not calling anybody stupid, but this is the things that you have to understand. As a token holder, basically what they're saying is the token is worth. It's like the dollar. If the government needs more money, they can print more money. That's basically what this is. I mean, this is worse than the dollar. At least the dollar has the U.S. military and the kind of government behind it, so it gives it some kind of value. This, from everything I'm seeing, it's totally freaking worthless. They can mint it at will. They can basically redirect strip all the value capture from the token and redirect it to themselves. This is terrible. I'm not seeing anything positive here.
And it didn't used to be this way either. MakerDAO wasn't a captured DeFi protocol until all of a sudden they rebranded to Sky Money. And honestly, dude, the name of the protocol, it's Sky.money. Sky Money. It's just, I don't know, man. I'm not a fan of the name, and obviously not a fan of the tokenomics, and definitely not a fan of the regulatory capture of the protocol. And I wish that I had known this a long time ago, because whenever I look on DeFi, like SUSDS, USDS, DAI, these stablecoin products, they're used in a lot of DeFi protocols. There's a lot of protocols that use this stuff, but I never knew anything really about it until right now today. And what I'm learning tells me stay far, far away. So yeah, not a fan of this.
That's something that we need to add. That's something we need to add to our list. Is the node approved stables.
I agree, 100%.
Symmetry for investors. Token holders absorb infinite downside dilution during a crisis, while governance caps their upside during times of record profit. This diagram illustrates the recovery roadmap. The current token depression is tied to specific temporary capital triggers set during the March restructuring. Once the solvency reserve hits its first trigger of $125 million, the protocol is programmed to scale open market buybacks back up to 25% of the surplus. Hitting the maximum target of $150 million restores aggressive market repurchases and staking distributions. The Sky token is currently paused in a strict capital preservation phase. Its value is a wager on institutional discipline, waiting for the protocol's balance sheet to fortify enough to finally relink record revenues back to open market token demand.
I mean, sure, whatever you say, never going to happen. I mean, this is just such a disappointment, in my opinion. I thought that Sky was like an upgraded version of MakerDAO, and it turns out that is not the case at all. So they're generating a ton of revenue, but
it's a rebrand and a freaking. I don't want to necessarily say rug pull. It's not that, but it's. I mean, the token, the value capture on the token, they got rug pulled though.
Yeah, I mean, if we look, Mike, just from the end of April to today, the token's down 40%. That's just recent price action. But trading below the 200-day moving average. Now that we know what we know about this token, what even is this thing? What is this? What's
the benefit to holding it?
I don't know. It seems like this is just fake, like a Fugazi coin. That's what this seems like to me. Because there's no value capture.
Well, it said that they're constantly selling the token. They're selling off the token. So I mean, basically, we're being anybody that buys this is being used as exit liquidity or liquidity. For them to fund operations and whatever it is that they do with the the money.
Yeah, so I mean, when I'm just taking a look at the chart here, though, what I think is this token. You see, the thing is, though, I don't know what the liquid float is, and so if all of the tokens, or the vast majority of them anyway, are controlled by that handful. Those handful of wallets, those handful of individuals, then there may not be enough selling pressure to really see this thing dump. But could we see it back down here at those October 10th lows? For sure. For sure. This is a pretty ugly looking pattern. You've got a level, levels of resistance here, support at the October 10th lows, support, higher level support, a higher low. And then this was even a higher low until it broke. When it broke, you got the retest and the failure. And so now that you've gotten the breakdown, the retest, and the failure, well, you get down below like 5.3 cents. The next level of support comes in at 4.1 cents. So, and this is still a Bitcoin bear market. We might be in the top of the seventh, inning of the Bitcoin bear. Still a Bitcoin bear, though. This is a digital asset, Sky. So this thing correlated with Bitcoin. If Bitcoin makes another move to the downside, you better believe this thing's going to 3 cents. So that's what I see here, just looking at the chart. But yeah, now that I know something about this token fundamentally, it's just another reason to stay far, far, far away. So now that we've learned about Sky, that's such a shame, man, because I thought that MakerDAO and Sky, I thought that these were legit. That irks me. I don't like that. That sucks. So let's take a look here at what is this, Curve? Yeah, let's take a look at Curve. I just gotta sign in here real quick, and I think we use that one. There we go. And Curve Finance, technical and economic analysis. So I think yesterday, didn't CRV, I think that this is the Curve governance token. Yeah, it did. Yesterday, CRV put in a pretty nice move to the upside and giving back a lot of it today, but didn't even make it up to that 200-day moving average. In fact, found some support. So I'm going to go ahead and remove that drawn object. I'm going to throw down support there. So notice that's the October 10th flash crash low. This is where CRV, I think this is the governance token, found support. Got a bounce, but didn't make it above the 200-day moving average. So unless this breaks out above the 200-day, which you should expect it not to, resistance should hold. It also didn't make it above 2.97 cents. So this is just a lower high right here. I would expect it to retest the lows. And if it retests those lows, I think those are all-time lows. Pretty sure. Like if we zoom out here to a weekly, there's a lot of alts putting in all-time lows, fresh all-time lows. So this is Curve's, I think this is the governance token. And, this is like, this is not exactly good looking. So let's take a look and learn a little bit about Curve.
In 2020, Curve Finance launched as a highly specialized protocol designed for one explicit purpose: low slippage trading for pegged assets like stablecoins. By 2026, those original mechanics have been aggressively expanded. The protocol has fused its core automated market maker invariance with an over-collateralized stablecoin, CRV-USD, and a decentralized credit market called Llamalend. The result is a fully vertical financial stack. This line chart tracks the protocol's total value locked across Layer 1 and Layer 2 networks. Note how the aggregate capital has leveled off, establishing a stabilized channel between $2.5 billion and $3 billion in 2026. To understand how a decentralized architecture commands billions in liquidity, we have to break the protocol down into two distinct operational halves: the revenue generators and the value extractors. The revenue generators are the protocol's math. These are the highly specific equations and continuous liquidation algorithms that process trades and issue credit without relying on centralized intermediaries. The value extractors are the protocol's tokenomics, specifically the vote escrowed model that captures the fees produced by the math and binds them directly to the CRV token. Mapping this exact cash flow bridge is the only objective method to determine whether the CRV token captures genuine economic yield or merely functions as a speculative governance asset. The standard constant product invariant subjects traders to severe slippage at the edges. Curve engineered the stable swap invariant, mathematically blending a constant sum model. This flattens the curve's center for zero slippage execution. If assets depeg, the constant...
Okay, so this is what Curve is famous for. Curve is widely known, the DEX is widely known as being a stablecoin DEX. You tend to get a ton of stablecoin liquidity on Curve on mainnet because of this. So that invariant formula that we just saw, X times Y equals K, they changed it to the constant sum formula. X times Y equals K is the V2 liquidity formula. So this is Curve's innovation, and this is for stablecoins.
Constant product component steepens the boundaries to prevent depletion. However, this flat curve design only works for assets that are mathematically pegged to the same value. Volatile, non-pegged pairs like Ethereum and Bitcoin require a completely different approach. For these volatile assets, Curve deployed its version 2 architecture, known as CryptoSwap. CryptoSwap utilizes an internal exponential moving average price oracle. As the external market prices for Bitcoin and Ethereum fluctuate, the protocol dynamically recenters its concentrated liquidity precisely around those active price points. These specialized invariants act as the mechanical pistons of Curve's engine. By strictly optimizing the mathematical equations for maximum capital efficiency, the protocol captures massive volumes of institutional spot trading away from generic automated market makers. The protocol then applied this AMM logic to the credit markets, deploying the CRV-USD stablecoin alongside the Llamalend borrowing infrastructure. Traditional borrowing relies on binary liquidation thresholds, triggering...
Okay, so CRV-USD and Llamalend. That's what we're going to take a look at once this is done.
Instant penalties. Curve replaced this with Llama, establishing stepped price bands. As collateral price declines, Llama gradually sells it for CRV-USD. If the market recovers, it automatically swaps back into the original asset, creating continuous soft liquidations. This continuous bidirectional rebalancing mechanism is not passive. It is actively executed by external arbitrageurs who extract profit from the price spreads between Llama's internal bands and external spot markets. This mechanism powers Llamalend v2, enabling users to post yield-bearing assets, like liquidity provider tokens, as collateral for CRV-USD loans. By converting binary liquidations into continuous automated trading, Llama protects borrower collateral during volatile sessions while generating consistent administrative fees for the protocol treasury. Looking at the macroeconomic structure of the CRV token, we see an area chart strictly capped at 3.03 billion total tokens. The vertical marker here indicates August 2024, the exact date the core team's linear vesting schedule concluded. This means the protocol has entered a mature phase of its emission decay schedule, bypassing the severe inflationary pressures that historically diluted early token holders.
Okay, all right. So that gives us a lot more color when we start taking a look at this chart. Because if we now know that CRV, this is the governance token, was highly inflationary, and now that vesting schedule has concluded, all the tokens should be out there in the float. That means no more crazy inflation, right? So we just need to keep that in mind. So maybe if there's some type of value accrual mechanism here, then maybe this one could be interesting. Maybe. Let's find out. Let me keep playing this content.
To capture any of the value generated by the trading and credit layers, users must lock their CRV into the voting escrow contract. A maximum 4-year lock yields one non-transferable VCRV, which then decays linearly over time, forcing users to repeatedly renew their commitments.
Ugh.
This
It's the same as Arrow.
Ah,
The same.
damn it. Why do they do this shit?
Access to distinct cash flows. First, 50% of all spot pool trading fees are collected, converted into stable assets, and routed to VCRV holders. Second, borrow interest from CRV USD loans on Llamalend is extracted and deposited into that exact same vault. Finally, liquidity providers who hold VCRV receive a massive internal incentive, up to a 2.5 times multiplier on their emitted token rewards. This creates an aggressive real yield model. It requires participants to permanently remove circulating CRV supply in exchange for a direct, non-dilutive share of the protocol's mathematical output. But the true demand driver for VCRV comes from gauge weight voting. Holders of VECRV dictate precisely which liquidity pools receive the newly emitted CRV tokens each week. This voting power sparked the Curve Wars, a hyper-competitive secondary market where external protocols battle to acquire VECRV. By controlling the votes, they can direct token emissions to their own liquidity pools, lowering their cost of capital and defending their stablecoin pegs.
Doesn't this remind you of something? Right? This reminds me of the aerodrome model quite a bit.
This pie chart maps total voting power, showing Convex Finance controlling roughly 42% of locked VECRV. This turns Convex into a network kingmaker, directing millions in emissions. To influence these votes, external protocols pay direct bribes, which is mathematically cheaper than issuing native tokens. This model is further reinforced by secondary yield aggregators like Yearn Finance and StakeDAO, which tokenize these locked positions to aggressively compound yields for participants. By tying liquidity subsidies directly to governance weight, Curve outsourced its demand generation. It constructed an entire ecosystem of dependent, warring protocols that must continually accumulate CRV to survive. The entire stack operates as a closed loop. The zero slippage invariance and LLAMA credit algorithms generate continuous spot volume, while the VCRV governance model extracts the fees and dictates capital flow. Yet this deep vertical integration creates severe compounding vulnerabilities. The efficiency of the protocol is tethered to highly complex dependencies. First, the 42% voting block held by Convex Finance represents a glaring centralization vector. If Convex's multi-signature wallets or smart contracts are compromised, a malicious actor could manipulate the protocol's core emission parameters. Second, the continuous credit engine relies entirely on Llama's soft liquidation bands. In a rapid market flash crash, asset prices could drop so violently that they bypass these bands entirely, stranding the system with under-collateralized bad debt and threatening the CRV-USD peg.
Yeah.
Third, the system carries inherent technical risks. Curve's reliance on the Viper compiler exposes it to deeply embedded code bugs, and integrating complex yield-bearing vaults into Llamalend introduces new Oracle manipulation vectors. These debt risks are backed by historical precedent. In 2024, cascading liquidations on massive leveraged positions held by Curve's own founder left the protocol scrambling to resolve millions in bad debt. Furthermore, the protocol faces relentless external pressure from flexible hook-based architectures like Uniswap v4, which aim to replicate Curve's mathematical efficiency without its structural overhead.
Right.
Curve Finance has built one of the most mechanically sophisticated value capture engines in decentralized finance. Its architecture solves slippage, softens liquidations, and locks up circulating supply. But its continued
But at what
dominance
cost?
relies on absolute precision, demanding flawless mathematical execution and a precarious balance of power among the warring protocols that feed it.
Oh man, that sucks. So Curve, let's take a look at Curve. So I'm going to hop on over here to DeFi Llama, and we're going to go ahead and search for Curve Finance, the protocol. Let's check this out. So still $1.4 billion TVL. That's pretty significant. But, at the start of the last bear market, it was at 23 billion. So, I'm no math genius, but I think that that's 90% down. So yeah, not not good, man. And then let's take a look. How much money do these guys make? Oh, looks like earnings negative, negative, negative. Have they ever made money? Nope, nope. So I don't see why you would want to hold CRV, let alone VCRV, and lock it up. So yeah, that sucks. That really sucks. Okay,
It,
maybe.
it was interesting how similar, to the old, VE33 model that, that this was, as far as Aerodrome with the, the 4-year locks and how it degrades over time and, just, all of those different aspects, very, very similar. And then, same as Black Hole and, a lot of the other ones. So no, it's,
Well,
oh, go ahead.
yeah. Well, because these guys pioneered it. These guys
Oh, yeah,
launched
yeah.
years,
They've been
years.
around a lot longer than Aerodrome.
Yeah, I think that they pioneered that whole model. And now that I'm on the Curve site, like, what's going on with this UI? Like, okay, so on the bottom here, it shows me the footer, like, but the footer is like popping into the hero section. This looks like it was made in 1990. Like, what the hell is going on with this UI, man? Not good. Okay, let's take a look at pools. Okay, so base APY, incentives, these are stablecoin pools. So let's just sort by base. What is VAPY? So variable APY is the annualized yield from trading fees based on the activity over the past 24 hours. If a pool holds a yield-bearing asset, the intrinsic yield is added. Okay, all right. And I've got to be able to filter this. You see, like, why can't I filter? Why can't I filter this stuff? Like, I want to be able to filter by volume and TVL because I don't want to look at something that's got, like $1 of TVL or cents. You know what I mean? Like, why is this UI so horrible? This is a big protocol. Like, why did they never fix this? This is like basic stuff. Like, if you want people to use your protocol, then make it beautiful and easy to use. This
Well,
is a one point.
make it look like you at least put some effort into it.
I know, right? Like, this is a 1 point something billion dollar protocol, right? 1.4 billion. Like, I don't understand, man. Like, how is it that they haven't fixed this? Well, maybe it's because they've got TVL, but they don't actually make any money. Maybe that's what's going on here. I don't know. So I'm just going to go ahead and scroll down through base variable APY.
If we go with our holy trinity of that we're kind of toying around with, does the protocol generate fees or revenue? Is it profitable? I mean, we keep kind of seems like we keep coming back to these fundamentals. Does the chain, does the project, does the protocol generate fees and revenue? Are the tokenomics or the mechanics such to where if it does, those are shared with token holders? There's just it seems like more and more that maybe this needs to be like the 3-part checklist of picking what I'm going to be investing in.
I agree. This has definitely got to be part of it. And then, I'm just taking a look here at some of these pools, and here's the thing though: if you're looking at a pool like this one, USDC SUSDAT, and you see, okay, well, 84% base variable APY, a lot of volume, a lot of TVL. What you need to know is what in the hell is SUSDAT? And so I just did a quick search on Dex Screener, and what I found was, meh, meh, look at that,
Oh,
depeg by 18%. So yeah, that kind of explains the volume, which explains the yield. So you got to stay far, far away from that thing. Is USDAT, does that have to do with Mr. Saylor's products at all? I
I
think
don't
it
know, but
does.
I think that's why there would be a lot of value in that, to having a risk number attached. Have a stable coin list on the site. To where people can look and basically give it a risk score, and then maybe they can click on it and it explains why. Have criteria where what is it backed by. Things like that, to where people can understand, because a lot of people just think, and I did for a long time. I was like, oh, stable coin means it's pegged to the dollar, it's backed by the dollar, it's hey, it's all good, it's all good. That's not the case.
No, it's not, because they're not created equal, these so-called stable coins. So I'm just sorting here. These are the only filters that they give us access to. So I just clicked on USD because Curve is a stable coin DEX, for the most part, right? I just want to figure out, like, are there any interesting stablecoin pools over here? There might be, that's definitely possible. But we've just got to understand what these stablecoins are. We've got to find, pools that have plenty of TVL. I'm going to sort by TVL rather than base APY. And now that I've sorted by TVL, I'm just going to scroll down, and I'm looking for, like, if you're going to deploy capital and you've got counterparty risk with whatever the token protocol is, you've got protocol risk with Curve, you've got chain risk depending on the chain that you're operating on. If you've got smart contract risk, you've got economic risk. If you are going to take on all of these risks, 1.7% is not going to do it. Like, that is not compensation for taking that risk. It's just not.
That's not even keeping up with inflation.
It just doesn't make any sense at all. Like, why would there be any TVL here if literally, like, why is there 8 million in TVL here for less than 0.5%? Like, what's going on?
I mean, I can see. I mean, if they're good, solid stable coins, I mean, I can see where maybe with interest rate arbitrage, or levering up or looping, you might be able to make it make sense. But it'd be fucking hard. I mean,
You can't.
not that 0.47. I'm talking like, if you're making like 3 or 4%, or
Dude, even that is damn near impossible. So, like, and 3 or 4%, we're talking, Mike, that's treasury yield. That's risk-free yield. Like, why would you have,
unless you can get tokenized treasuries that you could use to do some sort of DeFi advanced strategy. That's the only kind of counter to that would be if I was going to try to lever up, then I would want something that's tokenized, to where, yeah, if I could do a tokenized treasury and be earning 4 or 5%, and then take out a loan against that and buy more and just do all that stuff that we always talking about. Then yeah, I would definitely go with that. Risk, less risk or risk free treasuries over.
Right, but so my point here, Mike, is when I'm looking at these variable APYs, they're so low, and
Yeah.
like if you're going to take on all of those risks that I mentioned, and you're not even going to generate like the return free rate of return, which is like 4.5%. If you're not even going to do like the bare minimum, which is 4.5%, which is you can get risk free. If you're not even going to do that, then how in the world does it make sense to do this?
They're variable. So like, I mean, what is the other side of the spectrum? I mean, we're seeing where there's like next to no, because nobody's borrowing and stuff like that. I mean, the market's kind of dead. What does it look like? What do the interest rates look like when the market's hopping?
Well, I mean, these are pools. These are not like lending vaults. These are liquidity pools. These are
shit. Okay, sorry.
Yeah, these are liquidity pools. So like, like why would you, if you've got Go is the Aave stable.
Yeah.
So if you've got Go and then the Curve USD product, like, okay, so that was the February problem. But if you've got these two
don't
tokens,
mind that little guy. Don't mind that little guy.
Yeah. But if you've got these stable coins, why would you ever okay, so what is this? Rewards APR. So maybe this token APR based on current prices of tokens and rewards rates. So 1.17% daily, 1/8 of 1% weekly. What is this? Curve LP reward annualized can be reached with max boost. Oh God, these are these scam tokenomics, dude. So what you've got to do in order to get to this 13 to 33% is you've got to buy their bullshit governance token, CRV, and then you've got to lock it for 4 years. And then you've got to use that to vote on your own pool, your own position to boost your yield. So that's the only way that this makes sense is if you hold and you've got to hold a ton.
Well, that's what it was talking about in the video, where it was, there was all these, large organizations that were buying up the CRV, and that's where the 40-something%, came from, where basically they were buying up that CRV token to vote for their own pools to lever up like this.
Yeah, so I mean, but there are other examples of this, like Pendle does or used to do something very similar. So if the problem is though, is that you've got to buy, or at least on Pendle, you had to buy a ton of the token in order to like allocate it to your position to boost your yield, where it didn't make any sense. Like unless you were planning to buy the token and hold it for years and years and years and like continuously just increase your own yield. Okay, well maybe but
keep in mind, to be able to vote, you're having to lock it. So they're having to buy a shit ton of this CRV token and lock it from anywhere from a week to 4 years. And they have to do it for 4 years to get the max voting power out of it. So yeah, I mean basically it's not a fan. Not a fan.
Me neither, and just looking at the boost formula, like, okay, if your protocol requires some complex incentivization scheme to get people to use it, or if your token requires that, then you do not have real product market fit. The real product market fit comes from something simple. This is not simple. This is like some complex, extraneous nonsense. And
it incentivizes big players and kind of screws a smaller retail.
It really does. So and then there was that convex. So convex finance, they basically like allocate all or half of the voting power. So looking over here at convex, back at the start of the last bear, these guys also were at 20 billion in TVL. Where did that TVL go? It's all gone. And so that tells you what you need to know. The fact that there's no TVL there anymore. And like, dude, this is the Convex website. The fuck is this? Like, this looks like it was made by a preschooler. Like, what is this, man? Like,
looks like a website for like Minecraft or some shit.
I know, dude. Like, this looks like a video game. Like, what these guys just don't seem to take this stuff very seriously. Like, this is still a $500 million TVL protocol. Why is it that they, made it look like a Minecraft game? So let's take a look at this governance power. They control 53% of the VE curve. Wow. They control 40% of VE fracs. They control 54% of VE, I think this is F of N, FXN. And they control 20% of whatever RSUP is. I think that's a rhino, that little icon right there. So, all right, convex boosting for curve, some curve pools on convex. Okay, they're doing 20 some odd percent, but I mean, dude, how does convex work? So you deposit your LP tokens from curve fracs or F of X into convex. You begin earning rewards with the group boost applied. Again, these complex, tokenomics, these complex incentivization mechanisms, this is just like, it's a scheme. And if you can't understand where the yield is coming from, you are the yield. So like, I'm going to hard pass on this, curve, convex, pass, hard pass. That's a shame, man. Sky too, hard pass. Sky, regulatory capture. Curve and convex, Fugazi tokenomics and Fugazi incentivization mechanisms. And also, like, the market is telling you that there's no product market fit because TVL collapsed. So, the protocols that have product market fit are the ones where you see TVL going up and to the right. Think Morpho. This is what product market fit looks like. So, we gotta, get away from those Ponzi-nomics of the last bull. And, Sky, MakerDAO regulated into, oblivion. Or they did it to themselves by buying toxic U.S. treasuries. So yeah, this is very, very eye-opening for me. I really didn't know a whole lot about Curve or about Convex or about Sky until today. So let's see here. Mike, we've got 10 minutes left. I wanna go ahead and maybe we can run through the socials. Maybe we can run through the website a little bit and just let everyone know, like, if they want to join us on this journey and learn more, these are the places to go.
Absolutely. So if you want to join the conversation, with Twinkerbell and Scotty D and Jeff and the rest of the crew and the what is that? Thought I saw. Oh, never mind. Then come on over here to YouTube to @the_node network, all one word, and you can find all of our shows. You can find. I mean, because we truly are a network. So you can find our shorts. You can find this show Monday through Friday 9 a.m. to 11 a.m. Crypto and Chill Tuesdays and Fridays at 5 p.m. where me and Jeff just talk about just kind of have a drink, laugh and bullshit, and just casually talk about crypto. It's more about just relaxing and decompressing. It's an evening show. And I appreciate. I mean, you guys have really started showing up for that, and I appreciate that because it's a lot of fun to do with Jeff. It's kind of our legacy show from the DCA days. Jeff, by all means, if you're always looking for those low cap gems, the blockchain report is your place for that. Monday, Wednesday, and Thursday at 11 a.m. immediately after this show. I mean, if you're looking for that, again, 50x, 100x, a lot of these projects that he talks about are ones that haven't even had token generation events yet. So great content there. My solo show, Sovereign Soil. This is where I share my military experience. I share my homesteading experience, my emergency prep experience, firearms, fitness, all that kind of stuff, situational awareness, just all those types of topics. This is where I share my cabin. I shared the whole experience with pictures. The cabin that you see behind me, I lived in a tent and built it myself with my own hands, and I shared that whole experience. So if that's something that you're interested in, the market wrap, that's where David does daily, at market close, on the East Coast. He does about 15 to 20 minutes of charts. We've been doing some coaching on Tuesdays and Thursdays. And I think that we're going to starting next week. We're going to start doing some live, DeFi strategies, and actually entering into different strategies and getting delta neutral on things like, aerodrome locks and, kind of unconventional, strategies like that here live on the show, show how you can, actually make, decent, generate decent, yield, long term, and nothing's going to be get rich quick, but, long term, some strategies that can help you, accomplish that. Jeff, one of his passions is being a DJ and has been doing a really good job with finding other DJs, that he is friends with in the Bay Area in San Francisco and doing interviews, tutorials, sharing their music, so Saturday nights at 6 p.m. if you're interested in that. Crypto or Red Pill. So this is where we just get unhinged. This is where we, drink, if some people smoke it if they got it, and we just talk about whatever. I mean, Bermuda Triangle, ancient civilizations, psychedelics for, therapeutic purposes and medicinal purposes. You name it, we talk about it. Religion, politics, all that, taboo stuff. Gaming and chill. I started, actually, I need to put it up. We've started that back up. So it's going to be, probably, me and David, occasionally somebody from the community. I played World of Tanks. What was it, 2 days ago? So I need to put that up. I'll do that right after the show. And then our 24/7 music. So, David has started generating some AI music, some really, cool, kind of background music for when you're working, when you're working out, when you're cleaning the house. A lot of, cool things here on the network that you can check out. So that you can find here on the on YouTube. If you want to pop over to X and find the node _ network, this is where I just share alpha that I find throughout the day when I run into it on projects that we're bullish on, and to point out and debate with people and try to get some of these maxis that shill a lot of these projects that we personally think don't have legs long term. That they're basically their price is a reflection of hype. I'm constantly trying to get them to come on the show because they want to say that I'm stupid and that I don't understand what I'm talking about. It's like, cool, then come on the show.
It's like, hey, come tell me why.
Yeah.
Like I would love to be shown why I'm wrong. All you gotta do is do it live.
Yep. And I have yet in like a year and a half, 2 years, I have yet to have any one of them take me up on it.
That's how they're full of shit.
Exactly. Because I'm more than willing, and I do, in my exchanges with them, I detail why it is that I see no value capture. I show them, and I discuss the tokenomics and how it doesn't work for token holders. And then they'll just respond, with like a stupid meme or some personal attack. It's like, okay, so basically you have nothing of value to say. So yeah, enough said. So anyway, and then this is probably the gem of it all. This is our official website, thenode.pro. And this is where you can find all the value. So our no cost, no gimmicks, nothing scammy. You can come here and you can go through our no cost courses. DeFi University. If you're a beginner, intermediate, or advanced, there's something for everybody. Just come here, It's great content where you can go through and watch videos. You can read through the content. You can listen to it while you're driving, like podcast style. While you're working, you can listen to it in the background. Hell, if you want to listen to it while you're sleeping, and hope that it's gonna like soak in
Just
some
listen
content.
to it 24/7. In fact,
Yeah,
put it on repeat. And you know
exactly.
what you should do? You buy a headset, strap it to your head, and then for 24 hours a day, just listen to us talk. That's all you do.
Exactly.
That's what you do.
Exactly.
Yeah.
Recipe for success. So anyway, we offer this, and the quality of this material is better than most of the stuff out there that they're charging hundreds, if not thousands of
Mike, what is your name that you logged in there? He says that you're in there. You see, because it's supposed to say your name. Is that the name of your email address that you put? You see where it says right in the center of the screen, under above Explore Free Courses. You're in there. It's supposed to show your first name.
No, I have no idea why it's saying there. It's like I think I'm logged in as a Mike at the No Doubt Pro.
Oh wow! Okay.
So the AI, I guess, is doing that.
Maybe that's a bug.
So again, there's DeFi University. Another thing that we do not charge for of high value is these deep dives that we do.
Dude, how good are these deep dives, man? So good.
Dude, these two that we did today, how I altered that prompt, to focus on the value capture of the token.
Yes.
I'm
Me
loving
too.
that. So I'm going to keep doing that. But you can see, we did Kita. I sold my Kita yesterday live on the show because of what we found on Kita Network. The tokenomics are terrible. I'm bullish on the project, but the tokenomics are terrible. A lot of these, we've gone through. We've done, Hermetica. We've done Chainlink, Cardano, Provenance, Monab, Euler, Zcash, Injective, ICP, Near, Venice, Ripple, Stellar, Liquidity, Aster, Ondo, Tron, Canton. We did one on just all the different stable coins. Hyperliquid, Athena, USTB, Plasma, Avantis. And we're going to keep doing these 2 a day, Monday through Friday. And Jeff, whenever he does them on his days, we're going to start posting these. And you can go through these. Again, no cost. I mean, at the worst, you might have to sign up with your email to get unfeathered access, unfettered access, but super high value. You've seen the way that we have the videos and the reading material and the source the source documents and the slide decks and all of that. We don't charge.
That's 50 protocols that we review per month. 50.
Yeah. So Twinkle Bell. I'm sure at some point we will do Monero. The AI newsletter. There is a no cost. You can generate this if you want to give it a test drive. You can come down here and you can test drive and see the value there. So
I'm still working on getting this thing really polished and good and ready for prime time. It's getting close, very close. And once it's done, that's going to be what we run through for the news every day.
Yeah. And then another thing that's no cost is our Discord. If you want to join the Discord, join the community, get in there. David's always in there dropping alpha. Scotty D's always in there dropping alpha. I'm in there, being an idiot and posting funny stuff and putting my 2 cents in. And it's a great place to hang out. There's good people in there. If you have questions, we're happy to help. So yeah, great space. And then there is one channel in there that is for the premium live calls. And again, you can try it out at no cost, for a week, where you can join a Monday, Wednesday, and a Friday call and see if you find value in it. There's nothing hidden here behind paywalls where no trust us, bro. You can try out everything that we charge for, and if you find value in it, purchase it. If you don't. The one thing that we do ask here is if you find value in anything that we're doing here, if you like the vibe here of us giving away the no cost, the valuable no cost content and education, just go down, hit the thumbs up, give us a like, give us a follow, give us a subscribe, and share it out to people that you think might find value as well. That's all we ask here, is help us get this valuable information, the no cost information. It's not like we're trying to shill our projects or our products to get you to buy them. We're giving a lot of this stuff away. Help us get this out to people so that they don't get taken advantage of by other malicious people out there that are looking to just take people's money. The store, if you do want to support the channel, if you want to buy a hat or a shirt or something like that to help fund our cause here, we greatly appreciate it. Not necessary, but we greatly appreciate it. So that's another way you can support the channel and kind of rep the brand. Learn. This is what I was talking about. If you're a beginner, intermediate, advanced, you can click and it will take you to the modules. And if you click on the modules, you can see it's just this is the 1, 2, 3, 4 the different. And actually, you know what? I'll click into it real quick. So you can go in and, like I said, the podcast, you can listen to it while you drive. If you want to watch the video, a little 6-minute video on what is DeFi. You have the lessons, the slide deck that you can go through, and basically lines everything out. Where you can read and you have the visuals. Really well put together content here. I mean, I cannot stress enough that you don't need to pay for this stuff. Do not go and pay for these programs that other people charge you for when you can come here and do it at no cost. Our programming. This is a one shot. Monday, Tuesday, Wednesday, Thursday, Friday. These are the live shows. Gold is the day shows. Purple is those paid live calls, and red is our evening shows. So if you're just wondering what's on and when it's on, you can do it there, or you can do it on the YouTube channel. Coaching. David has a bespoke service where he does one-on-one in-depth coaching with you. And again, this is something that he's done live on the show, that he shows you what it is that he does in the coaching. If you want a no obligation, evaluation, put in your email and book a call with David, a live call, one-on-one, where he can, basically get to know you, get to know what it is you're trying to accomplish, your risk profile, what your, portfolio looks like currently. And potentially, if, he feels that you're going to get, max value and you think that you're going to get value out of it, then yeah, you can purchase, this service. If not, if he thinks that maybe there's some stuff that you could learn before, buying this service to make sure that you get the most value, he might tell you, hey, go check out our no cost, DeFi education in DeFi University. Once you've done, this module, and this module, come back and see me, and let's look at, getting you into the coaching program, which, it's more than likely he'll probably do. And then, of course, last but not least, David has put together basically a structured intelligence, API, to where all of the different, APIs that we use to pull to populate our newsletter and all these different things, basically data sources. He packaged it, so if you want to build out your own, you can do that here. There is so much value here, both paid and unpaid. All we ask is that you share this out. Share out the channel, get other people watching, get other people learning, so that we can all learn, grow, and invest and profit together. That's all we ask.
Hell yeah. Like, share, subscribe. If you get something from this, value for value. The easiest way to, show that you care is just to share the stream, subscribe to the channel. Simple as that.
All right. Well, I appreciate y'all. And what is it? Let's see what we got going on the rest of the day. So Friday. So we got the market wrap with David later on today, 4 p.m. Eastern, 1 p.m. Pacific. We have the live call that I'll be on with David at, what is that? That'd be 2 p.m. my time. So right after the market wrap. And Crypto and Chill tonight with me and Jeff. So if you want to join us for any of those, we greatly appreciate it. Love your input. And until then, Veteran Crypto out.
Peace.